What's going on, family? This is Dr. Jake Taylor, Jake of the Private Bank Society Show. Listen, in this time, usually we do our show on Tuesdays and Thursdays, but we had to come give you a Saturday like quick update show because what's going on in these banking streets could absolutely change the game for you and your business. We're going to be talking about the Silicon Valley Bank, the collapse, the bank run, and everything. So make sure that you pay attention to this show because I'm going to tell you exactly how you need to move.
Let's buy some land and build a family, that's a grown-up flex. And see a black man winning and get so upset. This is generational, inspirational, integrative though. On the rise vertically, working like I ain't made it though. This is for my people, locker room speeches. Listen while I'm teaching, nails trying like a Kias. Stole it like I'm Jesus and brought it back like a re-up. Had to demonstrate the blessing for people who couldn't see it. Now we building assets before we splurge our cash. We was talking about the dream, dog, we heard y'all laugh. Now they talking about the team and I heard y'all last. I could never take the credit, I prefer all cash. Look, laughing at the crib cause I done turned into a bank. Probably turned into a mogul before I turned into a saint. Was just a man on his grind and I turned it into great. Turn my struggle into hustle and you know I'm getting paid. Let's go.
Listen, y'all. Hey, y'all, we got some crazy information we want to share with y'all today. The Silicon Valley Bank literally just collapsed. And the crazy thing about the Silicon Valley Bank, we're going to play a clip. We're going to show you all. We're going to really dive down into this and talk about how this actually benefits or affects your business and what we kind of project and what we kind of predict moving forward. But the Silicon Valley Bank was actually a Federal Reserve backed and controlled bank, which simply means the Federal Reserve was pretty much running this bank. And the FDIC had to come and take control of this bank and protect it from destroying itself. And it only covered all of the depositors up to $250,000, which meant that if you had anything in that bank more than $250,000, there's a possible chance, a great chance, that you will lose every single cent inside that bank. And guess what? This is not the first time it's happened. It's not the last time it's happened. We actually predict that there will be more bank runs that are happening moving forward. And this says a lot about, pass me that book. I be telling y'all all the time, the Private Banking Blueprint. I've been teaching y'all this for years. I've been telling you where you should be holding the majority of your surplus cash, especially the cash that you depend on. I talked to you about why it's important that businesses leverage and utilize these insurance reserves. It's absolutely critical that you listen because after this show, you're going to have a clear view on how you need to make sure that you take care of your stuff. Before we play the clip, Iggy, you got anything that you want to say to the people?
Listen, today is again, it's an emergency broadcast live from the BISCO headquarters. Listen, what you want to do now, if you haven't already, go ahead and subscribe to the channel, like this video, share with somebody you care about today because they'll love you tomorrow. That's all I got, brother.
Hey, man, this is finna get crazy. This is about to get real crazy. So let's go ahead. And start. Oh, let me get this. I'm gonna wait. Play the clip. We're gonna play a clip from Tom Billy Hughes show, and versus y'all just hearing me say the same thing every time. We're gonna have somebody else explain the same thing that I already explained, and then maybe we can bridge some context behind it and talk about what it means to you and how you can move forward.
I wish that we were talking about better news. I saw a video that you created about how the average person doesn't understand what we're about to go through. And as we sat down to record this, SVB just got frozen, Silicon Valley Bank. Looks like there's going to be a tremendous amount of capital lost. And thinking about what I'm calling the triangle of doom with interest rates, a slowing economy, and inflation, how does this all play together with what just happened? And how does the average person, if they don't understand what we're about to go through, how do they protect themselves?
Yeah, SVB Financial is really interesting because it's kind of a byproduct of what you just talked about, the triangle of doom. So we still have very high inflation. And that high inflation is slowing down the economy. Now, to fight the high inflation, the Federal Reserve Bank is working to raise interest rates. Now, higher interest rates help to cool down inflation, but that also slows down the economy. Now, the case of SVB Financial, the bank, is really interesting because they have been lending money to a lot of startups, like Silicon Valley startups. And when you have low interest rates, it creates ease of access to money. Because like if you can borrow money for 2%, I mean, you only need a 4 or 5% return on your money to justify making an investment.
Listen, make sure that you're paying close attention. I'm going to try my best not to interrupt this. It's 12 minutes of straight fire. I will break this down in terms, in layman's terms that we can understand. But we talk to you about all the time of understanding the financial scope, understanding financial education, so that you're not being taken advantage of. Y'all know I talk about this all the time. We be depending on these institutions that are no better than you, and it's actually worse because we depend on these financial constructs and these institutions. You never get financially well enough to understand that you are at a loser's game, especially when you talk about dumping your surplus cash of everything that your company depends on into these bank savings accounts, only for you to be let down with something like this, because people say all the time it's a once in a lifetime chance that something like this could happen, until it happens, and that's all of your company's cash flow up to $250,000. So imagine having $4 million in a bank, right? $4 million for payroll, marketing, expenses, all this other to pay off bank notes, to pay off loans that you got, and then the bank collapsed because they mismanaged their money. And guess what happens? They only are able to give you $250,000 of your $3 or $4 million. How you gonna take care of these bank notes? How you gonna pay your staff? How you gonna pay your support? How you gonna pay for the technology or whatever you need for your business if it collapses with the bank? Push play. Let's continue. We're gonna try to get through this thing.
If you have to borrow money at 10%, now you need a much higher return on your money to justify that investment. And what we've been seeing, and this is not just SVB, I mean, there's a lot of examples of this, but what we've been seeing happen is investment institutions, venture capital firms, angel firms, and startups had such easy access to money. I mean, of course, we printed trillions and trillions of dollars over the last number of years, but now if you wanted to raise money, venture capital firms are sitting on boatloads of cash. And they're competing against each other to get the best investments. And so we saw the valuations of everything rise. Obviously, we saw home prices skyrocket over the last couple of years. The stock market skyrocketed, even though we were going through the worst recession during the pandemic since like the Great Depression. The stock market grew, real estate prices grew, startup valuations went through the roof.
All right, stop.
The reason why these valuations went through the roof was because...
Stop. He's about to explain something. He's about to explain something. I want you to pay attention to it. But I'm gonna go to the board real quick so that you can kind of see exactly what it means.
Can you plug 4 up, please?
Iggy's gonna plug the board of 4 up so y'all can actually see directly the screen. But y'all see a lot of people online, especially on this here internet, that's been telling y'all finance, car note, lie, insurance, bank this, loan this, credit this, all this stuff. And I was telling y'all, even during that time, do not trust borrowing all that money for your businesses, because none of those interest rates are fixed. The only typical interest rates that are fixed, and he's going to explain this in the video, are mortgages. Everything else is variable, which means when the interest rates go up, the cost of you having to pay that money back also fluctuates, which means that you can get literally capped out of your loan because you over leverage. Especially y'all two-row Airbnb folk. Go to 4 real quick. So,
It's the wrong one.
huh?
You gotta plug it into the other side.
Go to out. He's about to go to. We're finna go to 4 real quick. Listen, y'all. I want to show y'all something. So when y'all be looking at these banks, the reason why so many businesses were able to get access to this funding is because when America lowered the interest rates, it made the cost to get money from banks cheap. Okay, so the banks didn't really have to go through a lot of vetting periods to be able to determine if your business was a legitimate business enough to be able to make its earnings back. Let me tell y'all something. When banks lend money, come back to me. When banks lend money, believe me, I'm telling you, it is considered an investment. When banks lend money, they consider it an investment. So when they're investing in your company, the only difference is when they invest, they don't want equity. They want their money back with a specific rate of return. That's how it works. And all rates of return are variable. They fluctuate and change when the interest markets change. Okay. So when the Fed dropped the interest rates, that means the cost of the banks borrowing money from the Fed dropped, which meant that they can lend money out at a cheaper rate. You can borrow money from the bank at a cheaper rate, which meant that the bank didn't need you to be a genius to be able to return them interest on their money because they were lending money at 2%. So imagine this, go to 4. If the bank can lend money, they can get money from the Fed at 0% rate. That means that they can lend money to you at 2%. Well, in order for them to make sure that they're making profit on the money, making money so they can be profitable, the only thing they need you to do is be able to return back 4% so that they can be able to justify lending money to you. But when the interest rates go up and the bank now has to lend to you at 10%, the odds of businesses being able to, on a consistent basis, return back over 10% of profit outside of the sales that they're producing are slim to none. He's going to talk about that in the video. And most businesses will have to go and make more money. But how can you make more money and sell more products in a recession and when people are scared to spend money and the cost of spending money is a lot higher? This is when I talk about being your own bank. This is when I talk about understanding the importance of insulating yourself and not over leveraging yourself, because this is the time when stuff like this happens. This is the time when you see the difference between the sharks and the minnows, the lions and the gazelles. It's very easy for everybody to make money in the market when the market is great. Interest rates are down. Banks are giving money and not checking nobody. Y'all doing illegal stuff, putting in applications, lying about your startup business, getting all this access to these loans and these lines of credit and these credit cards, only for you to go invest in liability or these quote unquote assets that you have done any due diligence on outside of a freaking 3-week course. And then when shit hit the fan, customers stop buying products from you or using your service or driving that ugly little car that you got on Turo, you still got to pay the bank back interest at a higher rate now because your interest rates were not fixed. Go ahead and go back to the video.
Every bank, every investment institution is competing against each other with boatloads of cash trying to get into these firms. Now, SVB financially, like, I'm gonna be completely honest, like, this is happening right now. So I only know based off of the information that has come out over the last number of days. So I'm giving you just based off of this. Things can change by the time this goes live. But they were lending money to a lot of startups. I think it was like 4 or 5 out of 10 of the startups out of Silicon Valley had money from SVB. And so now when you're competing against a startup, you might say, okay, if you make $100,000 a year, I'll value you at $1 million. I'll give you $100,000 for 10% of your company, something along that. They'll value it at that. But then if you go to bank number 2 and say, what will you do? And if bank number 2 says, I'll value you at 800,000, you're going to say, well, I'm already valued at $1 million. Can you do any better? Now, bank number 2 might say, okay, I value you at 1.5 million based off your $100,000 of income. Then you go to bank number 3 and say, hey, can you do better? And they might say, I'll value you based off your $100,000 of income at $4 million.
Pause it.
Now you're like, okay, we're talking.
Pause it. They're saying that there's some echo. I don't know what the echo is. It may be from your mic, Mogul. So make sure that you mute your mic when you're playing a video. I don't know. But this is what I want to tell you here. Okay. Especially when it comes to these valuations. Y'all been trying to invest in stock market. Y'all been trying to invest in all these things. And y'all invest into these asset classes without really understanding how to look at the earnings, how to look at the financial, landscape of a business, how to understand the economics of the business. Iggy says all the time, understand the marketing, the distribution, the branding, how the products are being sold, where they're being sold. Why is that important? Because if you're investing in a business where it doesn't have a clear-cut understanding understanding of how they generate their clients, where the customers come from, where the distribution of the products or services being marketed, branded, or or pushed through, you don't understand that business enough to be investing in these companies. That's why in the stock market, y'all have seen a bunch of these tech companies take huge hits because they've been misvaluated. The valuation, the value of quote unquote these tech companies have been misvalued because the interest in the cost of money was so cheap. You could be able to fluctuate this value. For an example, with a tech company, you have a 10.4 times valuation or value of a company, which means that the tech company could technically say, we made $100,000 last year. And then they can go to the bank and say, hey, or they can go to an investor and say, based on our 10 times multiple, technically we're worth $1 million.
Right.
And so, and then they can literally take that and go to another bank, like he's saying, and go to another bank and put those valuations against each other because the banks are trying to get what? That person's business. They want to lend to that tech company or they want to lend to that company so that they can what? Be able to get that book of business and make money from lending money to this quote unquote company that all of these banks are so-called interested in. So what does that mean? A bunch of people were getting inflated valuations on what their business was actually worth because the cost of money was so cheap. If you do not understand the economics of finances, you're going to find yourself in these situations to where when you want to exit or sell your company, you thinking your company worth something and it's not really worth that, and you can't ever exit because you don't know the true valuation of your company if you get to that selling point for you to actually sell it. These are all micro and macro economics that a lot of us decided. We actually got this education in school or in college when you went there. We just were oblivious to listening to this information. The next thing I want to tell you, all these folks in the real estate, equity up, you getting equity rich. Y'all, almost $2.4 trillion of equity collapsed the last all 2023 when the market has what? Changed. When the cost of money increased. There are more people that owe more to the bank than your home is actually worth today because you bought an inflated asset because you did not do your due diligence. You did not take your time. You're so quick to want to get rich that you're still going to be broke because you don't take your time to learn. This is what we teach in private bank society. We teach this for $11 a year. We teach you how to read financial reports. We teach you how to read finances. We teach you how to understand the economics of these businesses so that you can be able to determine if your business is equitable or not, or these businesses that you invest in are equitable or not. It's important, y'all. The name of the game of wealth is not just 1 + 1 = 2. It's understanding that there are formulas that go with this thing that if you do not get yourself together, you're going to get blasted. Push play, please.
Now you start to shop like this, and valuations just started to skyrocket. And then, when you have easy access to money, it fuels, I don't want to say it in a bad way, but dumb investments. Because I can pay, if you can get such easy access to money, you can run a business where you're spending $1 to make 50 cents. And this is a tough concept to understand, but a lot of companies actually do this, especially in the early stages, where they spend $1 to make 50 cents because they're just trying to grow their market share. They're trying to grow the number of users they had. Like Uber used to lose money on every single ride. Why? Because they wanted to eliminate the competition and get the market share.
And they could get the cheap capital.
How
much of what's happening right now do you think is a result of increasing interest rates? Is that a big part of this? And obviously it's so early, but do you think that there's scandal here? Is it just interest rates
are a huge part? Because what's been happening now is the Federal Reserve Bank is trying to bring down inflation, because inflation is still, even today, extremely high. We're closer to a peak of inflation than our lows, which means people's incomes.
Y'all, the reason why I'm so loud and I'm so it's because the philosophy that I teach does not show precedence when everything is sweet in the market. The philosophy of what I teach is a foundational principle. When I talk about private banking, when I talk about understanding the economics, when I talk about slow down, learn the game first before you start getting yourself into this stuff. This is when this blueprint actually matters the most. This is when it actually matters. We don't have to worry about the market doing this. Do you want to know why? Because the large majority of our capital is not in no bank. We're not depending on loans and lines of credit in order to build and grow our company. So none of that really affects us to the magnitude of every other business or asset class. And this is why it's important. Everyone always talks about leveraging and banking and using money and living on the bank until the bank screws you. I know some of y'all like, bro, but my money not with SVB. Bro, my money's not with that bank.
Oh, man.
Yeah. Warnings are always given before destruction.
Yes.
Warnings are always given before destruction. Like, so let's go back to the board for a second.
If y'all getting game, go ahead and share this with somebody. It's finna get gooder and gooder.
Yeah, y'all need to make sure y'all share this. Go to 4. All right, thank you. So what you got to understand. Let me tell you in layman's terms what this effect is. Say your rate is at, the best thing I can do is I'm gonna get a loan calculator. That's the best thing I'm gonna do. Loan calculator. All right. So say for an example, your loan amount is $100,000. You done borrowed $100,000 on a 5-year term. We'll say a 3-year term from the bank for your business at a 4.5% rate. Your monthly, so $100,000. $100,000 at a 4.5% interest rate on a 3-year term. On a 3-year term is $2,974.69 a month. You're a small boutique business. You generate possibly, let's say, $10,000 a month in revenue before all the other expenses. So somebody do math. Iggy, can you do math? 10,000 minus $2,974.69. So before you can even do anything, the bank gonna get paid first. So what is left?
10,000 minus what?
10,000 minus $2,974.69.
$7,025.31.
And 31 cents. You see that, Iggy?
Yep.
All right. Person number 1 in the chat, if y'all see this, for those that are watching it live. That means before you even can do anything, you're working with $7,000 to keep things simple and easy to understand. Mm-hmm. When interest rates change, mm-hmm. when the market changes, when interest rates change, when the market changes, go back to 4, please. Thank you. Oh, I'm sorry. Yep. I did?
Yep, definitely.
Okay. All right. I plugged it. Yo, I can dip under here in my suit now because I lost 17 pounds in 14 days. I'm getting my sexy back. Where's my applause, Amir? Where's my applause?
Wow.
With our wealthy regimen.
I'm just hating y'all, just for clarity.
Y'all think Iggy wearing that shirt for no reason? That hat for no reason? We on our wealthy regimen.
Tighten up.
All right, so look. So that's $2,974.69. Now let's go over here. We're gonna do the same 100,000. I'm writing with my left hand. Like Amir would say, ambidextrous.
Ambidextrous.
And let's say the interest rates are now at 10%. Let's go 12%. Because what y'all fail to realize is that when you borrow money from the bank, there's only one type of real fixed rate, and that's your house. If you get a fixed rate house, Everything else is variable interest rates, which means it can change when the bank's information changes with as far as what it borrows money from the Federal Reserve. So we're gonna do a 3-year term. Mm-hmm. If y'all feel like if y'all look like a kid, it's because it's left-handed and it's better than Amir's. A 3-year term.
It's not.
Your monthly payment is going to be what? $3,321.43. Now subtract that from 10,000, Iggy, please. Bless you, my brother.
$6,678.57.
$678?
Yep, and 57 cents.
Y'all may not see that as a lot of a difference, but when you're talking about millions of dollars, $250,000 that you borrow from the bank, and a lot of y'all go multiple banks. What them people online be telling you? All right, so what you want to do, you want to go to Navy Federal, right? You want to you know what I mean? Then what you want to do under your other LLC, go right back to the same plug and run the play and then borrow money again because your Toro cars going to be able to, you feel me, do what it got to do. Then you're doing the same thing with your car notes. You got 7 car notes in a line of credit, in a credit card. Walking around talking about if you ain't got $250,000 in line of credit, you crazy. And you see a lot of them online. They selling courses real hard now, ain't they?
They selling tough, hard selling.
They selling them products now.
Almost begging. Almost.
They not online telling you go get no loans and no credit cards now, is they? Why is that? Why is that? Because when you don't understand the economics of anything that you do, how can you ensure and protect yourself when stuff does not go according to plan? Ask yourself that. Before I got into wanting to borrow money, I studied how money works, how banks work. Why? Because that's who I'm going to be borrowing from.
To go purchase assets.
Now, the part that I want you to get clear, y'all need to like this and share this out to everybody that you can, because y'all, I've been teaching y'all this since I came on the internet in 2020. I'm the one who started the wave of the private banking, if y'all remember correctly. I wrote curriculums and blueprints and books, and this book I teach you how consumer debt is the number one cause of death in America because of times like this. Imagine your house is under a bank loan. Your cars are bank loan. Your business depends on bank loans. You don't fix your business. You just go get more money from the bank to be able to cover up what you made a mistake of and think that that's going to fix it. Loan. And when the market changes and your rates go up, you lose everything. You lose your house. And this is when people be wanting to commit suicide. You get stressed, got a heart attack, all this stuff. And yes, the strategies and the ways that I teach you are a little bit slower. No, you can't get in the phantom as fast as everyone else is projecting. But I guarantee you, they finna be trying to sell their cars. But let's keep going. Go back to the board. What you fail to realize is when there is a recession, I told him to subtract the $10,000 of revenue. But if any of you are in business, if you can admit most of your businesses have went down in revenue since the recession and since the interest rates have went up. Most businesses' income goes down. Why? Because you don't know how to navigate in these waters. And when you're swimming in water that you've never swum before, you end up drinking that water and damn near drowning. So when your revenue goes down, but the interest rates go up, your payment is still due. So most people take about a 30 to 40% cut in revenue when interest rates go up and people are scared to spend. So actually, you don't even have this that you're working with. Iggy, let's do a real practical. Let's go around $6,700 a month in revenue minus the $3,321.43. While he's calculating that, come back to me, please. This is the piece of business they don't teach you on that here social media, boss. This is the piece of business they don't teach you on TikTok, boss. It's interest rates go up. Inflation goes up. Can you write real quick? Inflation goes up. Which means what? People are scared to spend money. Why? Because the cost of just everyday living has increased. Which means they can't spend extra money on extracurricular things as much. So when spending goes down, so does your revenue. But when interest rates go up, so does the cost of that loan you borrowed. So you gotta pay more money to a bank and make less money from your business, which means you have less money to work with. That's why you stressed. We teach this damn near free in Private Banking Blueprint, Private Bank Society for $11. PBSDollarClub.com for $11 a year. We teach all this. You learn it. You get familiar with it before you start to go out there and put yourself in positions and predicaments that your entire life depends on, and now you're stressed out past your imagination. You cannot get ahead. If this is bringing y'all value for people that's watching it live, let me see ones in the chat.
See ones in the chat. Y'all go ahead and share that. This is good.
Go ahead, Iggy.
This is good because a lot of what's going on with the SVB bank is based on bank runs, and where the investors or the people who have their money deposited in the bank, the depositors, they are uneducated. They don't know what's going on. So there's a fury, there's a panic that's going on. When you have understanding, when you have knowledge that you're giving today, you can be more comfortable in maneuvering because you were already prepared for things like this to be a possibility to happen. So this is good. Y'all share that.
And listen, let me tell y'all something. When you're in certain products with a bank that's not backed by the FDIC, all your money that was in that bank is gone.
All of it.
So when I teach y'all, get with a dividend paying, mutually owned insurance company. Start a contract with that company. Dump your surplus cash inside of the insurance reserve because it is protected by law. Ain't no bank run on no insurance companies. Insurance companies bail out banks, not banks bail out insurance companies. No, it's not sexy. No, you don't have access to it as quickly. But it protects the integrity of the pool of capital where you're storing your cash. It's what we teach in the Private Banking Blueprint. It's what we teach in the Private Bankers Society. This is what we've been trying to ding over your head, and I've been telling y'all this since, especially since the pandemic. I said, hey, y'all, things are going to get ugly. And when it gets ugly, hopefully you have been listening to me when things are good. Listen, you don't build a shelter to protect your family when it's Armageddon. You build it when it's sunshine, daisy, and ladybugs outside.
Yeah.
Everybody laughed at Noah when he was building that ark because there was no sign of any disruption from everyday living until the rain hit.
So we got a great question in the chat, Doctor. It says, is this a localized bank issue or is this a widespread banking issue that is just beginning?
This is a widespread banking issue that is just the beginning because Silicon Valley Bank was actually ran by the Fed. This was a federal bank. So they operated not like traditional banks where you got a bunch of branches. They had 16 locations where 50% of the top tech companies in the world, specifically in America, had their money with this bank.
So we can see a lot of this impact start to affect these larger tech companies over the next couple of days, couple of weeks, and months to come.
Because guess what happens? Silicon Valley Bank goes down. Mm-hmm. If I couldn't get my money and I had some money in another bank, I'm going to go get that money because I don't want it to happen again because I can't afford a double or triple loss.
Right.
So when you pull money out that bank, then it scares other people that banks with that bank, which makes people want to go run to that bank to get their money out. This is why I tell you all, the reason why we like to put our money with insurance reserves is because the insurance company has to keep $2 for every $1 you keep in your account. Mm-hmm. On the contrary, banks can, when you give $10, they keep $1 and they lend out $9 because they don't expect for everyone to come get their money at the same time because it will bankrupt the bank. And when the bank goes under bankruptcy, the FDIC takes control of that bank and then they sell it, the bank, to someone else who can actually rehabilitate it. But all of those assets, if it doesn't sell for a positive arbitrage, everyone that were banking with depositors with that bank, guess what happens? They lost all of their excess capital. That's the risk that you play for not knowing how to play the game.
Ignorance is costly.
Ignorance costs a whole lot of money. So let's take a look at the most recent thing that happened in 2008. Thanks for the notes, Mowgli. 2007, 2008, the financial crisis developed gradually. Home prices began to fall. You know what they were saying in 2008? Y'all, everything's fine. We're not in a recession. The housing market, it's not. We're going to land softly. Everything's going to work out well. Well, what happened in 2008? Well, what happened? Banks were lending money because interest rates were low. They weren't doing due diligence because you could be an idiot and return back 4% to the bank. But you gotta know business if the bank can only lend to you at 10% to return back to them 12, 14, 15% every month or annually. Bro, you got to know what you're doing. And 90% of entrepreneurs don't understand the game of business. They just know the game of selling their product or service.
Barely.
And barely that. Lehman Brothers collapsed. Biggest U.S. bankruptcy ever. That was a bank. Y'all, we can do this thing on and on and on, but the bank only covers you to $250,000. Anything over that, guess what, y'all? You are liable to take 100% of the risk after $250,000. I thought y'all said y'all wanted to be millionaires. Well, where are you going to keep your money, millionaire? Where are you going to keep it? So, here are a couple of major tech companies that got hit. Roku had about $487 million with the bank. Approximately 26% of the company's cash and cash equivalents as of Friday, which is most of the money they lost. Crypto Farm Circle had $13.3 billion with this bank. And a remainder of $40 billion in cash was held elsewhere. So $3.3 billion. Well, they get $250,000 back. Ooh. Imagine if you had a $3 billion company, your money was in the bank collapsed, and then they say, okay, here's $250,000.
They might as well just give you a quarter.
Facts, because that's or a penny in comparison. Roblox held 5% of its $3 billion in cash, was about $150 million with this bank gone, but they got a $250,000
Y'all know how big
voucher.
Roblox is. Y'all know that y'all children, your grandchildren, nieces and nephews is big on when it comes to Roblox and investment. So for them to take a hit, that's a major hit when it comes to the development of these games that are like Roblox, where you can build and play on. That's a big part of like a lot of the child market. I know my daughters have been on it and engaging with their friends. My friends' children are on it. You know, they're always talking about their kids buying Roblox. So a lot of the money that their parents were spending was going to Roblox and held in these banks, in this bank, and so that's going to be a big deal, a huge deal. I'm going to be interested in me following Roblox and what happens with them over the next couple months for sure.
the only way that this stays an isolated event is if the government can somehow calm the people enough to make us believe that everything's all right and this is just regular. In order to save this bank will have to raise damn near $20 billion. Allegedly. In order to save the bank and get everybody back their resources. And the problem would happen with the bank. So that is the question. How did the bank end up in this position? Well, it's simple. The bank was actually founded in the 80s. And it was growing ever so often over time. The bank took off during the recession. A lot of these venture-backed companies were like, hey, y'all got a bank with Silicon Valley Bank. So they were lending the money or investing in these tech companies or these startup companies, and they had to keep their money with Silicon Valley Bank. So Silicon Valley Bank seen a supernatural surcharge in growth in depositors, money in the account, and just a bunch of surplus capital being put into this bank from 2017 to 2019 to 2021.
Yep, it doubled.
So they doubled in their cash reserves. They doubled in their assets under management. In 3 years, they doubled what took them from, I believe, from 1980 something. They doubled that in 3 years. They did that in 3 years. What do I tell y'all all the time about growing too fast? Everyone's trying to be in a race to become the biggest and the best. And when you grow too fast, your system and infrastructure cannot handle that weight. Well, some people may say, well, Jake, why doesn't the bank just hold the capital? They can't. Because when you deposit there, they say, hey, we'll give you 0.8%. We'll give you 2%. We'll give you 3%. And when the Fed raises the interest rates, the banks also give more interest to depositors. So some of y'all have even seen interest in your checking account rise from 0.8% to 1.8%, 2%, and some even 3% that you're making annually. So if the bank is giving a depositor 1 to 3% on their checking account or their savings account, they got to go make at least double that in the market in order to justify that the interest that they're giving you. This is where the problem lies. The bank grew faster than it can control and handle itself, and it grew faster than it can control and handle catastrophes that happen in the world that is just out of your control. See, we all run businesses with the expectation that the business is going to be ran according to your plan. In a perfect world, when we build our business plans, the business plans that we build are perfect world. We're going to grow 10%, 20% year after year. We're going to add 20 employees every year. Everything's going to work out. We're going to
cap.
Yes. This is why we teach y'all the skill set of learning markets, the skill set of understanding marketing, technology and automation and financials. We don't teach y'all a business model. We teach you the skill sets that are adaptable in any model. So that as you are building your thing or you're helping someone build that thing, you're able to understand the importance of risk, how to protect your company from risk. And I'm going to tell y'all one thing. The people that ain't going to take no hit are the people that got their money in them insurance reserves. Tell you another thing. Businesses that's not going to take a hit are businesses that are not overly capitalized on using a borrowed capital. The people that's not going to take a hit are the people that's not trying to grow faster than they actually can handle. We talk to the young folk, then I'm going to get to the mature folk. Young folk. When you're in your teens, that's when you learn how to learn. When you're in your 20s, that's when you start to learn how to master skills. And you're trying to find and master as many skills and put them in your tool belt so that when you're 30 and you begin to identify with yourself, you ain't going to know yourself till you hit your 30s. Then when you get to know yourself, you realize what your capabilities are, what your abilities are, what your interests are, because you've dibbled and dabbled in so many things in your 20s that it allow for you to be more sure on opportunities when they come your way. That's when you fully apply your skill sets that you mastered in your 20s to opportunities in your 30s. Your 40s is when you really get rich. Your 50s is when you get wealthy. Your 60s is when it's a legacy. That's the order. And when you get too rich too quick in your 20s, you stop developing your skill sets. So when you hit your 30s and you hit that main hit, it's hard for you to rebound and come back. Mm-hmm. Because it was more the opportunity than your skill set to be able to thrive in any opportunity. This is what we talk about in that regard. So Iggy, I want to ask you a question from a marketing and media buying and advertisement perspective. When people say, hey man, I just want to generate leads. My problem is I need more leads. I need more customers. I need more sales. That's my problem. Other thing else, I got everything good. Can you explain why that is cap and why just throwing money at marketing just to generate more leads is not a solution? And then can you give a case study of a situation where you generated a bunch of leads for somebody and they just couldn't handle it?
Yeah, absolutely. So, you'll hear people say all the time when they're marketing and they're trying to sell whatever it is they have to sell to you. They're talking about you needing more customers, you needing more sales for your business, and that's what's going to change the life of your business. That's what's going to help you go through the roof. And yes, you absolutely do need more customers. You need more sales. You need more leads in your business, but you also need to be able to handle that increase in growth, right? For instance, if it's you and your business partner, right, and you make a couple staff and y'all are used to processing 500 leads a month, right, and you're at 500 leads a month and producing those 500 leads a month. By the time you get to the people who actually want what you have and you close, maybe you're at $10,000 a month, right? So you're saying, okay, I need to get to $20,000 a month. Well, all I need to do is just increase the leads that I have and I can make more money. Well, that's one aspect of it. But if you don't have the infrastructure in place, if you don't have the technology and the systems in place, if you don't have the processes in place, you don't have the people in place to be able to handle that influx in growth, if the infrastructure is not there, your business is simply going to crash. You're going to be you're going to have money coming in and you're going to be spending money trying to cover up problems that you didn't even know could exist. You're going to be spending money in the wrong place. So you make an extra $15,000 in revenue, but you might have to spend the extra $7,000 to cover up the mistakes that you made because you didn't have the infrastructure in place. Prime example, I had a client that they were selling products, hair products.
I say, don't say the product. You ain't got to be that transparent. Just give
They're selling a specific product, right? And I was trying to see how to talk my way around.
I had
right?
to come back. I heard him, y'all. I heard him. I was like, wait, let me get back in this room. You ain't got to get that specific.
Yeah. You said this is your transparency. Look, but I had a client. They were selling a specific.
Yeah. No,
they were selling a specific product, right? And they wanted to hit a certain quota by selling these products. So I looked at the numbers of what it is I was producing revenue for them, what the cost per customer acquisition was, and I said, based on my numbers, this is what it is you need to sell. However, when I was able to produce those sales for them, they didn't have the infrastructure in place to fulfill those orders. And if we kind of relate that to what's going on with SVB Bank, right? They don't, and you're talking, and just banks in general, how the banking system works. They don't have enough of money inside of the bank that if everybody came to pull their money out of the bank to fulfill all of those requests, all of those the requests for people to withdraw money out of the bank, because the infrastructure is not in place, especially We talk about SVB Bank and the diversity of the type of businesses they were dealing with. It was very concentrated in a certain industry with the technology. So if these technology businesses are not doing well and this is your prime market, then you're not going to be able to fulfill the need of your consumer. The exact same way if you just growing leads, you just throwing money at marketing, throwing money at sales to produce more revenue, you're not going to be able to fulfill on the back end if you don't have the proper infrastructure in place. And this is kind of what's happening here from a business and marketing perspective when we're talking about SVB Bank.
And y'all listen, at pbsdollarclub.com, y'all, we have if y'all are in the private banker society and you know that the value that's inside of there is past $11.
Right.
Put some stuff in the chat to let some people know. pbsdollarclub.com, $11 a year. You literally can learn all the stuff that we teach you, and we go live. All right, so listen. Great points, Iggy. He talked about it from a marketing perspective. I have to go back to the bank stuff in a second because I have to address IULs too.
Yes.
Everybody says, okay, I'm making these. I need to make more money, so I need to buy more leads. But very seldomly, and when we take our consulting clients and we dissect their business, we always attract them because of your prowess of marketing. It's just your prowess of marketing. Everybody, Iggy can help me make more money. Yes, but if you can't become more profitable, seeing less people, your system and infrastructure is still trash.
About it.
So we got a case that we're going to talk about very soon. A client that's turned into a really good friend of ours. Some of you already know him, but we increased his net revenue, his gross revenue by damn near $260-something thousand, and he saw 14% less people that year. How do you see 14% less and increase your gross profit revenue more than 24%? We worked on the efficiency of his process. That's what's the most important thing. And the piece that a lot of us always miss. You want to keep throwing more mud on the wall, and your process, you need to get better. For an example, say you're getting 100 leads. You get 100 customers, potential customers a month, 100 a week or a month, or whatever. I don't care, the week or the month. And you're closing 20% of them. People will say, man, I need to spend more money. I need to get more people so I can close more. No, you need to see how you can go from closing 20 of the 100 to 40 of the 100 to 50 of the 100. The better your internal process, the more efficient you become, the cheaper it costs to acquire customers, the longer a runway you have to make mistakes and build effective business.
And here's why that's important, because what happens is when you don't have that proper foundation and infrastructure in place and you increase the flow of business into your business, you become more stressed, you become more overwhelmed, you start making more mistakes, you start not hiring the right people, or just getting somebody to help you do it and paying them what it is that they're not worth. So you start really spending more money to make less money. You start bringing in more revenue, but the money that's going out, it starts to be more. So you're actually profiting less simply because you thought the answer was bringing in more traffic versus making sure your system and your processes were good, so that when that new revenue, when that new business does come in, you can sustain that at a new level and continue to grow, versus just having more revenue coming in with no systems, no process, no understanding how to maximize what you already have.
I'm gonna show y'all this real quick. Silicon Valley Bank's deposits grew from $60 billion in 2020. That took them the 80s to the 2020 to build $60 billion. It grew to nearly 200 billion. That's 140 billion more in 2 years.
That is insane.
That's insane growth. The data submitted to the FDIC by the bank at the end of 2022 showed that 89% of its 175 billion in deposits were uninsured.
Say that number again.
89% of the 175 billion of the deposits, nearly totaling 200 billion, was not insured under the FDIC That's a problem. That's a problem.
That's a huge problem.
Let me make it more in business terms. Oh, go ahead.
Imagine just to break it down. Imagine if you had $1, just $1, and you took it to somebody. You said, "Hold this for me, and until I come get it back from you." And you come to get it back, and they just gave you 2 dimes and a penny. Like, that's all you get right there. You get 21 cents back.
Will you be mad?
But I gave you $1. I told you to hold it. I was coming back. Well, yeah, I know, but I got 21 cents for you.
Like you hold my $1. I don't care what you do with the $1. I don't care what you do. Just when I come back for my $1, I want my $1.
21 cents, dog.
Oh, I'm sorry, bro. 21 cents. I told you it was a risk having your money with me. My investments didn't work out the way I thought it would. Here's 21 cents. Maybe possibly I can figure out. No, you're going to go crazy. And this is the game that we play with these banks. This is the game that we fail at when we're running these businesses. Mm-hmm. This is where we struggle at. And when we help our customers, our clients, we have a full service consulting business development marketing firm. We tell our clients, if you're not willing to commit to fixing the inside of your business, we're not willing to commit to helping you maximize the outside of your business, because it's going to come to a halt. You're going to bust out, and you're going to only blame one person, and it's going to be our company because we didn't, but whatever the case is, because nobody likes to take credit for themselves. Another example that I thought he was going to use was a company that he was running leads and ads for, and he got them so many leads that they shut their business down. They shut the ads off. They ran out of products. And it slowed down the momentum of their company because they couldn't handle the traffic that Iggy was able to produce with his advertisement strategies and campaigns that were going out. This is an issue. That means that there's an internal structural issue. And when it was presented to that person, let us fix the inside of your structure. No, I don't need that. I just need leads. This is what this bank just went through. Because what happens when your business goes and it has supernatural growth that you don't have a plan for? You cannot properly identify the risk variations that can ultimately collapse your business. Because contrary to popular belief, making more in revenue does not mean that you're more successful. I know businesses that make $1 million or $4 million a year, that have more net profit earnings, and they pay their staff more money than businesses that generate 10, 20 million a year because of all the expenses, because the only thing they cared about was growth, not efficiency and profit. Now let's talk about the IUL. Everybody talked about the IUL. Jake, put my money in a dividend paying a whole life policy. I would much rather an IUL. This is when you're going to see the IUL whoop a lot of people's butt, and they're not going to say nothing in public. An IUL is an index universal life. They have this indexing feature that says that when the market goes up, it goes with the market. The market goes down with the market. And then the interest rates are part of the variable and variation of these prices and the cost of money changing. When interest rates go up the way that it has and the market goes down the way that it has, people are going to lose money inside their IULs. That is not called a safe place for your money. As an entrepreneur, you are already risking heaven and earth to survive and stay afloat. Why would you play the gambling game with your surplus capital that you need? Why? So 89% of all of the deposits that went into the Silicon Valley Bank were uninsured.
Gone.
Which means that 89% of the assets under management disappeared. And you know what all of these businesses are going to get? $250,000. How is that going to affect the economy? All these tech companies, aren't they the one who hire and provide salaries to people that patron our businesses? So if they don't have no money from no job and they took a hit, how they gonna be able to pay their bills or the rent if you're a landlord or the food if you own a grocery store, or gas if you own a gas station, or consulting if you got a consulting company, or your coaching course program, because they ain't got no more money. So when big businesses take hits like this, that's why it affects the economy. Because if they're a large employer of people, this is typically what happens. These tech companies, how they're able to navigate the cost of interest rates going up and the cost of loans or debt increasing. It costs more money to service that debt. What you used to pay $10 million a month for as a $1 billion company, now you got to pay 20, 30 million for the same debt because interest rates have increased. It's not even going toward the principal. This is just interest rates increasing. So what does this mean? If I'm servicing debt at 10 million, say 10 million a month. I'm just using a large number. Let's say 100,000 a month is your monthly payment to run your business and debt finance charges and all of this. You like, man, but my business is generating 400,000 a month, so I'm positive 300,000, and I pay my staff. Well, if servicing a debt goes from 100,000 a month, you're making 400,000 a month, and the 100,000 a month now goes to now you got to pay 200,000 a month. And now your income that you make in your revenue, your business goes down to 300,000 a month. You're only net positive 100,000 a month now. You literally lost $300,000, nearly $300,000 of cash flow positive revenue. So what do big companies do? They do layoffs. Why? Because it makes more sense to lay off your staff that you're spending all this extra money on. Which also means what? Overworking on current employees. Which also means what? Lowering on customer experience. Which means what? Customers leave the business and go somewhere else. Which means what? Lower income again, and boom, bankrupt. That's how it happens. But when you actually build your business and you operate the way we teach you with the private banking blueprint, if you operate your business and how we teach you inside the private bank society, you look at the holistic vantage point of your entire asset, which is your business, you're going to realize, yes, our strategies are slow, but best believe they for sure. Iggy, you had something to say, Mogul?
I was going to say yes. We've already seen more layoffs in the tech field this year, the last 3 months, than we saw all of last year. Over, I think it's like 15,000 more already this year than all of last year in these 3 months. So tech companies are getting hit extremely hard right now. Like it's ridiculous how they're really just laying off. And then even when my friends heard 40% of her company actually just laid off like 2 days ago.
Yep.
So we're going to see this. It's getting really, really bad.
And guess what happens, y'all? When big employers lay off, those people can't pay their bills, which means that the businesses that they patroned, they got to do layoffs because the revenue is not there. And before you know it, we have an economic crash, and your entire life is dependent upon those bills and that debt that you have because you did not count the risk. Jesus in the Bible, because y'all know I'm gonna go there. I don't care if you're atheist. I don't care if you're Muslim. I don't care. I gotta teach you this. I'm gonna teach you this, and take the lesson. Don't worry about nothing else. In the scripture, it says, "Did you not count the cost?" In scripture, Luke 14:28 through 30. Is there anyone here who is planning to build a new house that doesn't first sit down and figure the cost so you know if you can complete it? If you only get the foundation laid and then you run out of money, you're going to look pretty foolish. And everyone passing by will poke fun at you, even your friends and your family, stating that this is a man that starts something that they cannot finish. Goodness gracious. This is why I tell people that the Bible is the blueprint of our business structure, business building. Do you not count the cost it takes to run a business? Do you not count the cost it takes to continue to borrow money? Do you not count the cost it takes to live your life in leverage? Do you not count the cost it takes for you to go get all this stuff, these material things that you cannot afford? If one financial thing happens in your life, you are obsolete. Did you not count the cost? So when Jesus was talking to his disciples, he said, hey, now, before you follow me, be sure that you understand what the cost is before you say yes. What does that mean for my business, Dr. Jake? Before you quit your job, before you don't take coaching and counseling, before you don't hire a consulting company to help you with these things because you want to learn it and do it on your own, before you think that you big and bad to be bold and beautiful, did you not count the cost it takes? Because if you cannot complete what you say to the world you started, your friends and your family, when they pass by you, they will not uplift you, they would ridicule you. So Silicon Valley is a prime example that they did not read Luke 14, 28, 30.
They didn't read it.
Iggy, there's a reason why we only accept a certain amount of clients. There's a reason why we just don't go run a bunch of marketing, just accepting anyone as a service for our consulting practice.
You know, I won't run no marketing unless we got the infrastructure together, like, and it makes sense. I'm not just finna just, because it don't make no sense.
Yeah.
But we're not gonna just waste money when we're trying to build a business. And early on, that's when I first started, marketing. Yeah. Early on, I was just, I get you more leads, I get you more customers, and I was selling, not understanding. So those of you who do have a business, if you are looking to expand your business or grow your business, and you have marketers coming and they're telling you, I can get you more leads and sales, but they're not trying to understand how you process these leads, what type of a system you have in place that when the lead flow comes in, to help you to make more money from that lead. They're not looking to do business with you long term, because if I'm marketing for you and I'm driving you leads, and I know that I can do a good job at driving you leads, and you have the right process in place to process these leads, this gives me the opportunity to have you as a client for a longer period of time, because you're going to be able to be able to profit from the leads and the work that I do. But if I'm a marketer, I'm just selling you the leads, and don't care how you process them. I'm just trying to do a little money grab, get that money from you right there, and move forward. Understanding that the infrastructure of your business, the foundation of your business, the principles that we teach inside the PBS Dollar Club are necessary for times like this is one of the most important decisions that you could make in your life right now. It's $11 a year. It was $1 a month. Now it's less than $1 a month. It's $11 a year for you to start learning these processes, so that when this happens and it affects you, because at this rate it will affect you at some level. It will affect you at some level. So being prepared for it to happen. Not saying, oh, this can never happen to me, because it can never happen to you until it does. And once it does, are you going to be prepared for it? This is not fear mongering. This is not trying to scare you. This is trying to get you prepared for what is. Like Dr. Jake said, facts. This is what's going on in the marketplace. And it's our job as being people who are aware of what's going on in the marketplace and have a solution to help you, to share that with you. It's up to you to be able to make a decision if you want to take this information and move forward with it. But we're gonna do our job and share, Doctor.
Hey, listen. Alicia Keys said, "What goes around comes around. What goes up must come down. And now who's crying? These sirens to come back." Listen, what goes around comes around. What goes up must come down. If the market is too good, please believe. Prepare for when it goes bad.
The market will correct itself.
Because guess what? It has to.
The market will correct itself.
So there's so much to unpack. There's so many lessons. There's so much this. But what Iggy said was right. And it's going to be my last remark on it. If you have a company that you solicit for marketing and they don't do an audit of your entire business to determine the effectiveness of that marketing, they don't have your best interest at heart, and they don't know what they really doing. Because it's impossible to just be a marketing agency and last long term or have a long term thought process of a relationship if you don't have the capability of being able to fix that, help them fix their entire process and funnel flow to get the customer, acquire the client, all of these things, because it's not just about leads and this and that.
Right.
So this is what we teach. This is what the BizCo firm is. We're a full service consulting, business development, and marketing firm. We do everything in-house so that you can be able to fix everything that you need if you're a business and you know that you need help. Our consulting piece and our coaching and consulting piece, that's just us guiding you. If you know you need help, somebody help you really get up in there and make your stuff more efficient, go to thebizcofirm.com, thebizco, B-I-Z-C-O firm.com. Fill out, we got a little calculator, but a little, what's the name of your business? Say, do you want more revenue in your business? All that other stuff. Fill it out, set up an appointment, and we'll see if we can be able to help you. We don't take a bunch of clients a year because we don't like to work with a whole bunch of clients that are unrealistic. We like people that want the long value, the long-term focus of their business growing long-term. I cannot work with people that come to me with a short-sighted mindset.
Correct.
It is hard for me to teach because I teach and we build our business thinking of the long term. And I always play the game a lot longer than the market. And I think it's important that if you really want to be a great at entrepreneurship, or if you just want to be good at understanding finances, understanding the cost that it takes to build that thing that you're trying to build. And this also goes to relationships. Having babies and getting married before you count the cost of the longevity effect of it not working, it not panning out, that business partnership not working. What is the long-term effect of that? And can I handle the rain? Can you stand the rain? What you got, bro?
Listen, we had to pop on here. Emergency live broadcast, because this is a conversation that's going on in the marketplace. If you haven't heard about it, I promise you will hear about it, whether it comes from your main news outlets or social media outlets. This is something, it's a conversation that that you will be involved in, and it's important that you understand. It's important that you dive into what we talked about in this show. This is live right now, but the recording will be here on YouTube for you to replay over and over and over, for you to understand and share with other people that you care about. Seriously, share it with other friends, with family, so they can understand what's going on and they can make a decision for themselves to be able to move forward with a solution, because this is happening, right? Look up and understand more about why this is happening. Be able to understand what a bank run actually is. Be able to understand where your money is and what's happening with your money. What would you need to do if you want to go claim those money right now in order to be able to protect it better? Being educated, being knowledgeable when it comes to your finances, when it comes to your business, is important. Understanding what's happening with this bank because the bank is a business. So understanding what's happening with this bank and what's happening with business, so that you can understand how you need to position your business to be able to grow. What infrastructure changes do you need to make before you start focusing on increasing or doubling up or tripling up on the amount of lead flow, the amount of customers or sales that you're able to produce? Are your processes as efficient as they can be, right? Dr. Jake said, look, if you doing 100 calls, right, I got 100 leads and 20% of them is all you're able to close. Well, how can you get to 30%, 40%, 50%? How can you become more proficient in your closing to be able to earn and make more money? Because that's one of the things that we specialize in when it comes to our consulting practice, right? Like Dr. Jake said, we can get people to start the conversation talking about marketing, But before we move forward with doing any marketing, we want to understand what their business is, how they're running the business, what the proficiency and how efficient is their business running when it comes to staff, when it comes to their technology, when it comes to their processes, when it comes to how they're packaging their products, when it comes to distribution. Understanding all of these different variables and these different metrics inside of the business to be able to get that infrastructure solid, so that when we do what we know absolutely we can do, which is the simplest thing, to go out and get more clients, to get more customers, increase lead flow, that once that comes in, the business can actually handle that and be able to grow, because we want you as a client long term. And if we can get you more sales and help you be more profitable because we help you be more efficient and proficient in your business and in your systems, then you're going to want to stick with us long term, and you probably want to tell your business friends about us as well. So make sure you understand what goes on in your business, what goes on in the finance, in the banking world, and being able to utilize that in your business. And I think that the main thing that I would want you to take from this episode is understanding that you got to have your foundation and you got to have your infrastructure in place before you can start building on top of it.
Yeah. We can help any size business up to $40 million a year. Our pricings for our consultant, biz dev, and marketing firm are flexible. They're adjustable. They're not fixed rate because we charge by the hour. So if you're limited in your budget, don't let that be the reason why. The things that we look for as far as clients are entrepreneurs and founders that are long-sighted. They think of the future. Those that are not afraid of doing the work and getting better. Those are not just looking for quick turnarounds. We don't like to help those people. Although we have in Iggy one of the best advertisement media buyers of our generation, we don't put ads behind no mess.
Never.
It's kind of like putting lipstick on a pig.
What?
Yeah. It don't make it look no
That
better.
threw me off.
It don't make it look no better. And then if you want to get actual training when we talk about these things, you can go to the pbsdollarclub.com. We have over 250 plus hours, 270 hours now, 270 plus hours of college level e-learning on business, banking, and finance. So pbsdollarclub.com, it's $11 a year. One of the most affordable coaching programs on planet Earth. And if you want to take your business to the next level, and you really want to work with professionals that can help you with every aspect of your business, from operation efficiency to compensation modeling on how to pay your employees and how to staff out right, pricing for be able to price your products correctly, research and development to determine the longevity of your company, your real competitors, the marketplace, your market cap. You want to be able to help you with financial auditing to make sure your audits and things are right. What you have to do to position yourself to be able to get investors to invest into your company or even sell your company. You want to help with social media management, marketing, growth. You want to help with advertisement, all those things. We literally do all of those things in-house. We've been blessed to be able to build some incredible companies.
Yes.
We've done millions of dollars. We've been featured in Forbes Business Council, Entrepreneur Magazine, all those other cool stuff. But most importantly, we only want to work with those who see the long value of getting some understanding first. Because if you can develop and become a much more holistic founder entrepreneur, the odds of your business lasting is going to be incredible. And let me tell you this, I'll let you finish with this. When you have a healthy company, when the market does this and the business goes down because they can't afford their debt and all of this, this is when you see healthy companies go and buy out their competitors. You grow not just by acquiring new customers, you grow by acquiring your market and your competitors. So if you don't prepare for them being over leveraged, I love when my competitors getting big buildings and all this stuff and cars and they jets and all this stuff, because I know they're expending more than if a market corrects. And the moment that the market corrects is the moment that you'll be able to buy your competition or buy your market at a discounted rate, and you'll be able to supernaturally grow your business. But you can't do that if you're not in the right position as a company as a whole, and you cannot do that if as an entrepreneur and the owner you are ill-advised or you're not as educated in the space that you need to be. It is not wise for you to be an entrepreneur that is not familiar and understand every aspect of your business. I don't care what people are telling you. I don't care what you hear on TV. When people say, I don't really know this, they tell you that so they can figure out if you know what you're doing. Because every single person that I've met that's run a $40 million business and up, they act like they don't know what's going on with their business. But they know everything that's going on with their business, and they know if you BSing them. So that's why they act like they don't know, to see if you know before you get the cash flow. Listen, I love you. There's absolutely nothing you can do about it. Sorry for the yelling and the screaming. I'm just so passionate because I've been preaching and prying and preaching and prying and preaching and prying for so long about understanding this concept. When we teach you all in this private banker society that you got to become your own bank, this is what we mean. Building an infrastructure, asset, businesses that can support and stabilize itself. So when things like this happen, you can go capitalize in the market and be able to do glorious things to do. Listen, I love you. There's absolutely nothing you can do about it. My name is Dr. Jake Taylor Jacobs.
And this is Iggy, and this is the Private Banker Society podcast. We'll see you live every Tuesday and Thursday. You never know. We might pop in on a Saturday or Sunday.
You never know. Tuesday. It depends. Oh, and then we're bringing the wealth bundle back.
Yes. So for those of you who don't know what the Wealth Bundle is, it is a bundle of all of Dr. Jake's books and curriculums bundled into one. You guys will be able to access that as a member of the Private Banking Society, the PBS Dollar Club. It will be for sale in there at a bundle price, and we will be adding it for all of the new members who are coming on board to be able to access and purchase inside of it. And this is going to be the curriculum, right? That you see right here. Private Banker Society, We Are Sick. This is going to be the PDF versions of it, the ebook versions of it. And so that you can get those, you can download them, and you can utilize them to go along while you're going through the curriculum, while you're going through the training inside the PBS Dollar Club. Hold on one second. I'm gonna actually show them the PBS Dollar Club so they can see inside of it, so they can know.
While you're doing that, I want to take a time to shout out to 8K subscribers. We want to thank you guys for actually taking the time to join us and listen to us. We're at 8,000 subscribers now. I want to say thank you to everybody that decided to take their time to come and subscribe to the page. And we really appreciate you. Let's make sure you get it out to as many people as you can. Like, share, comment, share it to a friend, a business owner, people that are thinking about owning businesses. Also, once we get to 10,000 subscribers, we have something special coming for you guys. Again, once we get to 10,000 subscribers, we have something huge coming for you guys. So make sure you like, share, comment, and get this out to as many people as you can. Okay.
Hey, back to Izzy. And Mogul looks a lot different when that light ain't hitting him right.
Yeah.
They're glowing with the flow. All right, so look. Y'all, when I tell y'all that we write curriculum, this is the curriculum. When we talk about the Wealth Bundle, this is the curriculum that's inside the Wealth Bundle. How to build successful brands, how to launch them from scratch, how to understand market, how to do research and development, how to build your a private banking system using your business. Like, this is what we teach, y'all. This is what I wrote. This is what's available for you on top of the things that you learn, and this is what's going to be available inside the Private Banking Society.
Yep.
Iggy's going to make sure that everyone that's a part of the Private Banking Society, you're going to be able to get access to this. And no, the physical versions will not be available. We've made a commitment as a company that we want to save the trees and be a part of environmental change. We want to make sure that we here to survive and our children are here to survive. So all of these will be literally available to you instantly.
All right, go to 4 real quick, Mogul. All right, so for you see the curriculum, just what Dr. Jake was talking about as far as what you get access to in the Wealth Bundle. This is when we talk about 250 plus hours of training inside of here. This is what it is we're talking about, right? The private the 4 pillars, so you can understand the 4 pillars that the Private Banking Society is built on. So not only that, you get access to the introduction to banking, live replays, because we have weekly Q&As where you can come in as a member of the Private Banking Society. You literally almost get like free coaching where you can pop on a 2.5, 3 hour Zoom with us and ask us questions and about your business, about what's going on in the community, about the curriculum, and allow us to answer them for you. As well as you get access to our affiliate program, the Private Banking Blueprint curriculum here. And this is what I like to call the scrolls of private banking. This is Dr. Jake literally breaking down everything that's inside of the book. You get it right here in video form where you can understand what's going on. Then even moving forward into the private banking challenge, the banking profit system, 12 different skill sets that you can learn that are transferable across any business. Every business needs these skill sets we teach. So again, Dr. Jake said earlier, we don't talk about business models and teach business models. We teach skill sets that you can use in any model, any business. These are those 12 skill sets that you want to go in and figure out which one's best for you and learn it and then be able to apply it. So this is all of what it is we have here. Go back to me. Well, this is all of what we have here. The website is right here on the screen, pbsdollarclub.com. If you are a business who is established already and you want to look at us as potentially being one of our clients, we'll definitely be happy to see if we're a good fit. You can go to thebizgofirm.com. That's also here in the black and set up a screening with us so that we can take a look at what you have going on, your business, and see if we're a good fit and how we can help you grow. With that being said, again, this is Iggy. This is the Private Bank Society Show, and I'll see you on the next one. Peace.
Let's buy some land and build a family, that's a grown-up flex. And see a black man winning and get so upset. This is generational, inspirational, integrative though. On the rise vertically, working like I ain't made it though. This is for my people, locker room speeches. Listen while I'm teaching, nails try.